Hey everyone, welcome back to Corporate Decoder, the place where we decode what companies are really saying with their official paperwork. Today we are diving into the Federal Home Loan Bank of Indianapolis's latest filing, and let's just say it involves some serious money movement. Ever wonder where all that money comes from and where it goes when giant financial institutions are involved? We're about to unpack it. Stick around because this isn't just about numbers. It is about how these numbers shape the big picture. And hey, if you're all about getting clear, no fluff insights from corporate filings, make sure you're subscribed. We also have a fantastic Discord community linked in the description below where we break down these documents even further. So, we're looking at a report from the Federal Home Loan Bank of Indianapolis, or FHLBank Indianapolis for short. Think of them as a specialized bank that helps other banks, like your local mortgage lender, have the money they need to make loans. They're a federally chartered corporation, which means they operate under a U. It's government charter. The report, we re-examining details events happening around mid-October of 2025. The main point here is to let you know about some significant financial obligations they are taking on. This section is all about financial obligations. In simple terms, it means the bank is taking on debt or becoming responsible for repaying borrowed money. Specifically, they are becoming the main player for some big borrowing packages called consolidated obligation bonds. These are bonds that will mature in a year or more. TRTD trade date, CDTD TD, QZIP TD TD settlement date, CDTD maturity date, CDTD next pay date, TD TD call type, ETD TD call style, RTD TD rate type, irate sub gen type send. C. TD TD next call. Amort date TD TD coupon percent. FETI TD FHLBank par. TDTR TRTD 10月1日2025分之4。TD TD 3130 B 85 G 3 TD TD 10月2日2025分之2 TD TD 2分之5。2026分之2 TD TD 11月2日2025分之4 TD TD non-减 callable sub-on TD TD variable single index floater floater 分 TD 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 R5000 000 style D TD R7 TD 10月1日2025分之4 DD TD 3130 B 85 T5 T5 TD TD 10月1日200215分之7 TD TD 1分之7 2026分之7 TD TD 2分之1 2026分之0孔 DD TD non-减 callable swindy TD variable single index floater floater TD 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 R 千2000 000 TD TD TR TR TD 10月1日2025分之4 TD TD 3130 B 85 W8 TD TD 10月3日200215分之0塔 TD TD 10月3日2037分之0打 TD TD 3分之4 2026分之0塔 TD TD optional principal redemption FUDI TD TD American Swendy TD fixed constant TDD TD 10月3日2026分之0 TD TD 5.000 聆听 TD TD 翻 TD TD 27000 000反 TD TR TR TD 10月1日2025分之4 TD TD 3130 B 85 Y4 淘 TD TD 10月2日2025分之9 TD TD 10月2日2032分之9 TD TD 2分之4 2026分之9 TD TD optional principal redemption CDTD American CDTD American TD TD fixed constant TD TD R分之4 2026分之9 TD TD 4.750 TD 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 18000 000 TD TD TR TR TD 10月1日2025分之4 TD TD 3130 B 86 TD TD 10月1日2025分之5 TD TD 2026年6月11日 TD TD 2026年6月4日 TD TD optional principal redemption SUDD TD Bermudan SUDD TD fixed constant SUDD TD 2026年6月4日 CDTD 3.795 RTD TD 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 R500 000 SIN 40 TD Tower. So here is the really meaty part. The table showing the specific bonds. This tells us about the money being borrowed and what it costs. For instance, we see a bond with a settlement date of October 2025 that has a principal amount of a whopping 250英里 LIN dollars. That is a huge sum. Another one settles on October 17, 2025 for 200英里 LIN dollars. These are not small potatoes. We also see bonds with maturity dates way out in 2017 for $20 and 2017 for $18. These are long-term commitments. And what are they paying for this money? Look at the coupon percentage column. We see rates like 5.000% and 4.750% for some of these longer term bonds. These are the interest rates they be paying on the money they borrow. For the shorter term bonds, the rates are listed as variable single index floater, which means the interest payments will change based on market conditions. Kind of like how your adjustable rate mortgage might fluctuate. Now, some of these bonds have a feature called optional principal redemption. This means the FHLBank can choose to pay back some of the borrowed money earlier than the final maturity date. It is like having the option to pay off part of your loan ahead of schedule if it makes financial sense for them. It is important to know that this report doesn't lay out every single detail of these bond agreements. They're telling us the big picture, the main financial moves being made. They also mention that they might change how they report this information in the future. These consolidated obligations are the backbone of how these FHL banks operate. They are essentially the debts the banks take on. Now, here is something critical. These obligations are the shared responsibility of all the federal home loan banks, but they are not guaranteed by the US government. This is a key distinction. If something goes wrong, the government isn't automatically stepping in to cover it. One more thing to keep in mind is how they are reporting these amounts. The numbers you see are the face value or par amounts. This means they don't account for things like discounts or premiums that might affect the actual price or value reported in their detailed financial statements. It's like seeing the sticker price of a car versus the final negotiated price. And finally, signing off on this report is Lana D. Buchman, who holds the title of Senior Financial Reporting Principal. This confirms that the information has been officially reviewed and submitted. So, what is the takeaway here? The Federal Home Loan Bank of Indianapolis is actively managing its finances through the issuance of these consolidated bonds. They are borrowing significant sums of money, with some of these debts lasting for many years. The interest rates vary, with some being fixed and others fluctuating with market indexes. The fact that these obligations are not government guaranteed is a vital piece of information for anyone looking at their financial health. Essentially, they are taking on substantial debt to fund their operations, and it's crucial to understand the terms, especially the lack of a government backstop. Looking at this filing, the story is one of active financial management with significant borrowing. The FHL Bank is raising a lot of capital, as seen in the multi-million-dollar bond issuances. The specific terms like optional principal redemption and variable single index floater highlight the flexibility and the potential risks involved in managing these large financial instruments. The most important risk to note is the absence of a government guarantee, making the FHL Bank's own financial stability paramount. Their direction seems to be focused on securing the necessary funds for lending, which is their core business, but this comes with the inherent risks of interest rate changes and market fluctuations. Alright, that is our breakdown of the Federal Home Loan Bank of Indianapolis's latest filing. What is your take on these borrowing activities and what they signal for the bank's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.